Welcome, everybody. We're going to go ahead and get started. For those late joining us, this will be recorded, or if you have to jump off, it will be recorded and posted on our website for you to rewatch. Welcome to our Cost of Doing Business webinar. Today, Fred Holbrook and Paul McDonald will be our presenters. Welcome, gentlemen. It's all yours.
Hello. Good afternoon, everybody. Thanks for joining us today.
Same here.
Fred and I are going to take you through the cost of doing business. We're going to work on why we want to do this and then how we do it using a calculator that United Appliance Servicers Association offers free to the industry, and it's downloaded off of our website. I want to start by emphasizing that the cost of doing business in each state is different, and it's evidenced here in the CNBC report for 2019. And it's interesting to note that Kentucky has the lowest cost of doing business, and California, which is no surprise, has the highest cost of doing business. You can find this for each year going back. I've been looking at this report since about 2014. So I know they're still on the internet. You can find them yourself by Googling the CNBC cost of doing business. There's the web address down at the bottom of that slide. The cost of doing business in our service department. Why do we care about that? We should be using and calculating our cost of doing business so that we can set service rates that will deliver some profits. It helps us knowing what our costs are to make decisions regarding employee raises and whether or not to bring on another truck and how another truck in our fleet would impact our cost of doing business and so forth. And you'll see that a little bit later as we get into the actual calculator. And finally, to ensure that we have profits from our activities in our service department. We need to know what our costs are against our revenues to determine if it's actually making money. So Fred and I put together the poll. Fred, you want to just touch on that?
One question is, do you currently have separate financial statements for your service department? And I think we've got 10 responses. It's simple yes, no. 60% are showing yes, 40% no. We've actually got one person say they only do service. So if you only do service, I guess the answer is yes. So please respond to that so we can at least have some data from this.
Give everybody a minute to do that. Good to see that some people actually do have financial statements, because we're going to learn very shortly that it's pretty hard to do this exercise without some financial statements that are separate and apart from your retail business, if in fact you sell appliances.
Well, like it's about 50-50.
50-50 split.
Those that have and don't have, what it looks like.
So this presentation today is geared more towards a self-servicing dealer, an operation that sells appliances as well, such as our brand source partners that we've just brought into our fold. And when we set the price on a part or an appliance, it's pretty straightforward and pretty easy. It's generally the selling price is equal to the cost plus some sort of markup, whether you use markup or margin. Either way, you add in some profit to the cost of the part and you come up with your retail price. Pretty straightforward. But when we come to the technician going to a customer's home, to set the service rates for this technician, we need to understand what our labor cost is, how much we pay him, the overhead for all the expenses that are behind your technician. We want to add some profit into that exercise. And then we have to multiply that by the efficiency of our department. And you're going to find out what that's about in a couple of slides. But as you can see, it's not so simple on setting service rates as it was setting the price of appliances. In terms of service rates, what's fair? Well, from my experience, if you're too low, if your rates are too low, you have little or no profits. You're actually leaving money behind on the table that you could have received. And you need profits and certainly sufficient service rates to cover warranty handling costs if you do any warranty at all in your business. And you'll see some slides later on about warranty costs as well. If you're too expensive, then you run the risk of the repair or replace decision getting tougher for your consumer. They might decide if it's too expensive to repair it, they'll just buy a new one. Also, if you're too expensive, you're going to be up against some internet competition, generally lower prices or people from out of town that are advertising across the nation and then paying others to do their work. And if you're up against somebody on eBay, Kijiji, or Amazon, certainly you have handling costs for the parts that you brought in. The consumer is going to bear the cost on any shipping charges from any of those online resources. And we would urge you to use flat rate pricing. It helps to differentiate you from the folks on the internet. Having a flat rate price that includes parts and labor all in one. If you can't do that, then maybe you want to use a unique SKU for your parts so that they can't shop it online. And in some cases, you may add additional warranties to the parts that you sell. I've seen companies do that. I did it myself for many, many years and recommend it to others, to adding a warranty that helps to differentiate you from others. In some cases, I know a company that is currently doing 5-year part warranty on any part that they sell and install. And again, this sets them aside, sets the bait for the customer to come back 4 years down the road if they should remember to come back to that company for service. Some pricing considerations to think about. I recommend that you charge what the market will bear in your marketplace and not the manufacturer's suggested retail price. You have cost to handle parts that warrant increased selling prices, as well as your service warranty obligations. Because your parts distributor sells it for $10 doesn't mean that you need to sell it for $10. In fact, I would suggest you can't sell it for $10 because you've got to actually receive it, you've got to order it, you've got to receive it, you've got to tag it, you've got to put it on the shelf, you got to pick it when the tech goes out. It's going to ride around on his truck, and if he doesn't use it, now you're stuck with having to return it. So you've got some additional costs that consumers may not have if they shop online. If you're not getting price complaints for your rates, then possibly your service rates are too low and too cheap. And in fact, if the only complaint you are getting is that you're too expensive, but everything else in the customer's experience was great, then I think this is the best kind of complaint you can get. To have someone say that you're too expensive, but boy, everything went perfect, they fixed it the first trip, that's a great review to see online. Because we believe that consumers aren't necessarily price motivated. Again, it depends on the market where your business is located.
Not all. Yeah.
So before we can price a product or service, we need to understand what the costs are to provide it. Things like the technician's wages is one, of course, is the obvious one. But then there's all these other overhead expenses that have to get repaid in every service call. So you need to take a little piece of each of these overhead items that I've listed here and add it into the calculation when you're calculating your service rates. Also, you're going to find on our calculator, it's going to tell you when you break even. You're going to add in some desired profit, and then the efficiency, we're going to talk about that, which is as simple as how many first call completes are you getting out of your company, out of your technicians in your company. In order to do this, though, we're going to need some financial statements. We're going to need to know our expenses. We're going to need to know our cost of goods sold. Specifically, we want an income statement for our service department that's different and separate from the rest of the business. If in fact we are running different activities in our company, you might have rental appliances, you may sell finished appliances, whichever the case may be, you want to separate your financials based on the activity in your business. If you don't do this step, you're pretty much running blind without knowing what's happening in your service department. It's great to know each month whether or not you've made any money in the service business so you can take corrective action versus waiting to the year end to have an accountant come back and say, well, you didn't make any money in the service business, but you made money overall. It'd be nice to know each month how you're doing in that service department so you can take corrective action. We're deemed essential service, and it came back. And it came back with a vengeance.
With a vengeance. Yep.
And then, of course, if you have someone has an accident or drops out of your business, you want to know each month how that's going to impact what you're doing in that service department. Question I like to ask companies is, how do you set your service rates today? And I'll be honest with you, before I learned what I'm sharing with you today, I used to make sure I was $1 less than the guy down the street. Or I'd connect a phone survey from one of my employees' cell phones so it couldn't be traced back to me to find out what my competition was charging. And that can be very dangerous. Just because somebody else can do it for less than you, they could be working out of the trunk of their car. You don't know what that operation's doing. And also, if you're a self-servicing dealer and a salesman comes back and says, oh, Mrs. Jones just got a fridge and the door's crooked, could you go over and adjust it? Well, if you can't get that covered under warranty, are you in fact charging back your sales department for that activity? If you're not, maybe you should be, because you want to make sure that the activity of your service department is profitable. So what does it cost to have a technician knock on the door? You know, it's as we said earlier, the hourly wage of that technician, but there's a lot of non-productive costs, training, vacation, ETO time. You're still paying that technician for that time, even though it's not actually going into, it is going into the service call, but it's not producing the service call. It's not contributing to the service call. Technician overhead, the truck, the uniform, any special tools you might need, recycling. If that's mandated in your state, you may have to have some recycling costs, gas and vehicle insurance costs. And then overhead, the folks that answer the phone that they talk on in your business. In fact, the phone line coming into your business, rent, utilities, business and realty taxes. I used to always forget that realty tax, and boy, when that bill came at the end of the year, it was a stinker. So you got to plan for that and know about it and factor it into setting your service rates. Warranty rejections, if you do a lot of warranty, you're definitely going to have rejections that unfortunately you just can't get paid back for. It's there to haunt you in some cases. Inventory shrinkage, broken parts, disappeared parts, technician lost parts. Maybe a technician stole a part from you to fix his sister-in-law's appliance. We don't know, but there is going to be inventory shrinkage, which also has to be calculated into the cost of knocking on the door. And I've mentioned efficiency a couple of times, and efficiency in its simplest terms is getting a first call complete. I think it's no surprise that when you can complete a call on one trip, you can make more money than if you have to go back for a second trip, or if you have to go back for a third and a fourth trip to a customer's home. Boy, you're now starting to lose money. It's costing you money to run that call. But efficiency in any business, it's a team effort. It takes relentless focus. You've got to really pay attention to efficiency all the time. Pre-screening calls before a tech goes out is a big way to improve efficiency. You want to make sure you're sending the right technician with the right skills and tools to accomplish the job. If it's a sealed system, some companies only have techs that do sealed systems. Other companies only have technicians that do wet products or cooking products and so on. So you want to make sure you've got the right guy going to the right house for the right repair. Does he have the training and knowledge that's necessary to make the repair the first time? Does he have the right parts? Is the customer fighting you by not being home and making you have to come back a second time? So scheduling is super important here. And I put that onus on the technician to make sure the customer's home before he wastes his time driving out there. And again, different companies, depends on how you're set up to run your business. If a technician's paid by the hour, he maybe doesn't care if the customer's home or not, because he's getting paid to drive out there and find out there's no one there. However, if he's on commission, he might be more interested in calling ahead to make sure that driving out there is going to produce him some income into his pocket. So a couple of ways there about paying technicians. You want to take into account the drive time. If you have in a city or a marketplace where you have bridges or hills, valleys, whichever the case may be, you want to plan the drive time accordingly so that you can be as efficient as possible. And I like to encourage people to make sure their technicians own their day by paying them commission, by them screening their own calls before they drive out, checking the integrity of the parts before they leave the shop to make sure that the part isn't damaged. There's nothing worse than getting a stainless steel door out there, finding out a big scratch across the front of it, or the edges, the corner of it's pushed in. Just an absolute waste of time. And then the technician should be calling the customer himself to confirm the complaint that the CSR took and that he's going to get access and payment today. Those are all essential to making sure that you have an efficient operation. And we'll show you in our calculator how the efficiency really impacts the cost of doing business and setting the rate. Now, what we're going to go through today is a bit of a process with getting information together. And there's an easy way to do it if you don't want to do it the way we're recommending it. And it could be as simple as this. Take last year's department expenses, if you can, calculate them out or weed them out of your overall financials and figure out how much your service department actually cost you to run. Then divide that by the number of completed calls, and you'll quickly come up with a basis for what actually cost you to go knock on a door. And you might be surprised. That number may be more. United Appliance Services Association cost of doing business calculator. If you go to our website, it's nothing more than an Excel spreadsheet with some yellow boxes. The yellow boxes here are the boxes that you're going to fill in with your information. All the other fields or cells in this Excel spreadsheet automatically calculate for you what the calculation should be. And you can download it from our website. Here's another shot showing you, if you go to our website, under benefits and then business tools and then business calculator is what it's called. And that allows you to download this Excel spreadsheet. Oh, that's interesting. So this is the first time I've used this Webinar Jam product, and it's taken the animation out of my slides. These arrows are supposed to come up one at a time, but I'll just walk through it. In the sample data, so we took out 104 days for weekends. We give our technicians in this sample company 10 holidays, paid holidays, so we subtracted 10 days out. Vacations, we took out 13, sick days, and days of training, which came down to 231 days available per technician to resell to the consumer. The next step down is how many hours in a day do you work? If it's 8, then you've got 231 times 8, or 1,848 hours to resell each year from each technician. Now, the sample data today assumes we have 5 technicians. So it was as simple as taking the 1,848 multiplied by 5, and you came up with 9,240 hours that we're going to resell to our consumers. The next step is we want to calculate our average cost per hour for labor. In this example, we had 5 technicians ranging from $25 to $35. So the average, we added those up, all 5 of them, it's $145, divided by 5, and we come with an average hourly rate per salaries of $29.13. Now, you may not pay your technicians by the hour. You may pay them salary, or you may pay them commission. In either case, you've got to work it back to an hourly rate. And I don't need to explain that. I think that's pretty straightforward. You can figure that one.
Hey, Paul, we're having some folks.
Questions? Sure.
They really want to know where you are right now.
Where I am personally sitting today?
Yeah.
Because of COVID, I'm sitting at home, actually, in Canada.
No. Where you are in the presentation? I'm sorry.
Where I am?
Yep.
Where I am in the presentation?
Yep. You're at the average gross labor cost.
Yes.
I think Maggie's telling them they need to reconnect at the top of the screen too, if you're having connectivity issues.
Sure, we can wait for a second for people to catch up.
With the presentation freezing and...
It might be going too fast.
Yeah.
The previous slide, that the average for our salaries was $29.13. However, we have to pay the technician for those other days that he's not performing. So it's going to increase our hourly average rate for salaries. So we take the $29.13, multiply it by, there are 2,080 hours in a year. If you do 40 hours times 52. So your average yearly labor cost is going to be $60,590. It would be different in your company based on what your rates are for your technicians and how many technicians. 13 that we thought earlier was the average. You see how it's increased, and it's because we're paying technicians for the time that they're off, for the weekends, the holidays, the training, and whatnot. So we're taking how many hours we're paying them for and dividing it by how many that we have available to resell. That takes us to the $32.79. Step 4 is one that we only do if you have a parts department where you sell parts over the counter. And if you treat that all in one as part of your service department, then you would take this step. However, if you do a separate financial statement for the parts department only, you would not add these numbers. But I've found that most people have it all wrapped up into one activity of their business. So we're going to show you here that On line 45, it's going to ask you what are your total part sales less the cost of those parts. In this example, we had the $231,000 in sales for the year. We had a parts cost of $150,150, which gave us a parts gross profit of $80,000. Let's divide that by the available hours we had to resell. Remember, it was 1848 times 5 technicians, or 9,240 hours for reselling. So we actually have profit from our parts activity of $8.75 per hour. We divided the gross profit by the number of total hours to resell, giving us $8.75. Step 5 is to determine what the gross billable rate per hour is. And we do this by taking our total expenses. We're going to put that number in. It's a yellow highlighted cell, so you have to enter that number. It defaults when you first download it to 300,000. In this case, it added the 150 from our parts cost to give me a total expenses of $150. Divide that by the available hours to resell, and you've got dollars per hour to cover expenses, $48.72. I apologize, this break even and profit wasn't supposed to show up until later on. It's the animation of my slides, but this webinar jam is taking the animation out, and I didn't realize that was going to happen. And I can't even read what's behind it for you. We're going to, so that gave us our hours to cover expenses. We need the average wage in there. That's what behind the question marks. We have the average parts revenue of $875, so we're going to subtract that number out of this. And now we see that our break-even point per hour at 100% efficiency is $72.75. That was, remember we started with a technician wage of $29.13, and then we went to 32 something. Well, now we've added in the overhead of our department, subtracted out the parts revenue that's coming in. And if we were able to sell all 9,240 hours at $72.75, we would break even. But breaking even is not what this game is all about. We want to make some money. So the next step is to add in your desired profit margin. You do it by entering it in as a decimal number. In this case, for the sample, I've decided that 15% is a fair markup or a fair profit margin that I want to get from my business activity of the service department. So I put in 0.015. When that's applied against the $72.75, now our gross billable rate per hour is $85.59. If anyone's having trouble with this, you could just put a question in there to have me explain it more thoroughly, and I'd be happy to stop for a second. But so far, we're now up to $85 gross billable rate per hour, and this is still assuming that we're able to resell every one of those 9,240 hours, or 100% efficient. Which, I'm sorry, I've never met a company that is 100% efficient. So we need to go to the next step and calculate our efficiency factor. This is step number 6. And depending on how many technicians you have, you're going to divide the average number of completed calls per day by the hours, by the number of hours per tech. So if you have one technician, it's 8 hours. If it's 2, it's 16, and so on. In our sample, though, we had an average number of completed calls per day was 5 from 5 technicians. 5 times 8 is the 40 technician hours in a day. When you divide those two, the calculator tells you that your company is only 63% efficient. And when we apply that 63% efficiency to the $85.59 gross billable rate per hour, we learn that we have to charge a completed call rate of $135.85 for every time we knock on a customer's door. And that's based on the overhead, the wages, the profit, and how efficient we can be. $135 sounds high, doesn't it? The next step down shows you if you increase that efficiency by 1 call per tech. So now we're getting 30 calls a day in 40 hours. You're suddenly 75% efficient. And when applied against the $85.59, the gross billable rate per hour, now your completed call rate has dropped, and you only need to charge $114.12 instead of the $135. I hope that demonstrates for you how important and vital efficiency is in your business. And we need to understand what that is. And the only way you can do it is to track how many calls are getting completed in one trip. from each technician every day of the working calendar. If you're not tracking completed calls per day, you've got to start, because efficiency has a huge impact on how much you should be charging to set your service rates at in order to achieve that 15% profit that I wanted. So how do we use the cost of doing business in warranty rate negotiations? Certainly, we should all be negotiating rates with manufacturers and third-party warranty administrators on an annual basis. And I know it's tough to do. If you do a lot of manufacturers, it's really tough to stay on top of that activity. I just was working with a company in the Northeast that has probably 20 to 25 different manufacturers, and it was pretty tough to stay on top of that annual negotiation. In fact, the vice president of sales took it over, and he started negotiating service rates with their franchise selling agreements, which is probably a great way to do it, because sales has a bigger tail to wag than service does. Be prepared, know your numbers. You want to be able to talk confidently about how much it costs you to run a service call, and showing these decision makers your cost of doing business is probably a good way to go. In some relationships, it really depends on who you're talking to, if they're the decision maker or not. And if you can't get the regional service manager to give you what you need, then you need to go up higher. Go to someone else in sales, or get sales to help you crack that nut so that you can get a rate that will deliver you some profit, as opposed to not delivering a profit. Now, we'll talk about that in a few minutes, but some manufacturers won't budge, and they force you to do work below that $135 or that $114 cost. And then you have a decision to make as a businessman or woman. You've got to decide whether or not that relationship is warranted to lose money on every call. And you'll see in a slide coming up that it's okay to be selective. You don't necessarily have to do every one. And again, it depends on how you go to market and how you promote your retail business, your selling business. If you claim that you do everyone, then I guess you're going to have to do everyone. But you may be able to farm it out to a local in town, or they may have a factory service division in your market where they can take over some of that non-profitable service. You want to also take into account how much warranty you do, because it's going to have an impact on your first call completes, which, as we saw earlier, impacts the rate that we have to charge in order to make a profit. The more warranty you do, the tougher it is to get first call completes, because you're dealing with cosmetic parts, new technology, new designs that are coming out. And in some cases, it's not your fault. You look at some of the mold issues on recent laundry, or rear bearings on some other laundry, or gosh knows what problems you're going to be up against with warranty that is not really a factor of what you did wrong. It's just inherent in that brand. Doing warranty requires more training. It certainly adds receivables to your accounting and parts credits. Gosh, I don't know many companies that do transactions where there's zero margin on their parts, and that's what the warranty business is for most manufacturers. They don't want you to make any money on that part. They want you to buy it. They want you to apply for credit. They want you to track a credit through a third party and make sure you get your money back. But no one cares other than you, the business owner, whether or not you got it. And that adds a lot of overhead to your business. It can also cost your customer satisfaction, your online reviews. If you're dealing with a warranty issue and you can't get a stainless door without a dent in it, and you've tried 3 or 4 or 5 times, because I've been there and I know it, you get customers get unhappy and they start leaving bad reviews for you, and that's a challenge. But mostly I want you to pay attention to the parts handling costs. I have a short slide to talk about that. But we've estimated that it costs you about 40% to handle warranty parts in your business. And that's something that can't be forgotten. It's got to be factored in. I have 3 articles documents I'm going to hand out as well. And one of them is all about this zero margin parts for warranty. And it's quite an eye-opener if you haven't thought about it in the past. It's a good read. There's some pros, some great pros to doing warranty service. Absolutely. Not only does it differentiate you from the big box stores, which is very important, it gives you access to technical information. Certainly it's to a 1-800 tech line for your techs in the field. That can come in very handy. If you've done the warranty repair right, you should get repeat business in when the product was out of warranty, and you'll be able to get COD business out of it. So warranty can lead to repeat business, there's no question. And also think about it, if you just sold a dishwasher to someone, they have 5 other appliances in their home. If you're in there doing the warranty service on that dishwasher, there's 5 other appliances that may need your help, or you're looking at it to service them. It gives us access to new customers for sure, especially if there's a product recall, but it does give us access to new customers. If customers aren't happy with the service they're getting from other stores, they may be turning to you for help. And then, you know, that's your decision whether or not you help your competition. It's a tough one. If it was a big box store, I would tell you that you probably should take that call, because you can take care of that customer better than any big box store, and hopefully that customer will buy from you next time and not from the big box store going forward. I know I'll get some pushback on that, but I certainly wouldn't want to help out my direct competition if there's another small retailer in town. But the big box stores, I don't mind taking some business away from them if I can get it. Again, as long as it makes sense on my cost of doing business and the rates I'm going to get paid to do that work. If I'm doing it and it's costing me money, it may not be as effective in the long run. Only you can decide this. Here's the slide I was talking about on the cost of these parts. Let me just see if I can get, I didn't want that. I've lost it. Nonetheless, this is a small chart that just shows you the revenue here across the top of COD part sales. This company has, on the first column, does 0 warranty parts. They sell $100 in COD parts. They have cost of goods sold for parts of $62, leaving them $38 of gross profit. Take their operating expenses at 30%, they're left with $8 profit at the end of the day. Take the same company and do 50% warranty in this business, and you have COD sales still of $100. You now have warranty part sales of $100. But look what happened to our costs. The 62 is still there for the COD parts, but now it's 100% cost of goods sold for the warranty parts, giving us a total cost of goods sold of 162. We still only have $38 in profit. And now we've got 30% of $200 is $60 in operating expenses. Boy, we lost $22 by doing 50% warranty than if we did no warranty and we saw a profit of $8. So you surely want to take into account how much warranty you're doing and what impact it's having on your business, on the financial side of it. There are costs of warranty to your repair schedule. Generally takes up slots for COD calls, and boy, that's not necessarily a good thing. So you want to make sure you protect yourself. So you've always got room for the COD call, because you'll make more money on a COD call than any warranty call. Often it takes 2 trips to go out. You've got to look at it, diagnose it, come back and get the right part to go back. There's a lot of work and cost in doing warranty. The margin cost, as I just demonstrated, you know, if the more you do, the harder it is to make any money in your parts operation. Often it's a lower labor rate from a manufacturer or a third-party warranty administrator. And then this 0 parts margin has a sure negative impact here on your profits. So in short, we suggest to you be selective, check your process, control it. In a good, healthy mix of warranty to COD is 70% COD, 30% warranty. And in my business, when I first joined United Servicers years ago, I was the other way around. I was upside down doing 70% warranty and 30% COD. I thought I was pretty smart cookie. I was also into the bank for $400,000 in loans. And I learned quickly not to stop doing warranty, but how to increase my COD business by focusing on the COD customer. And I switched it around 70-30 years later. And that's the winning combination, I think, 70-30.
Max.
So that's the end of our formal presentation. We'd like to open up now to questions for anybody that has questions. If you post your question in the chat room, Fred and I will be happy to answer it for you.
Only question we've had, Paul, and I've already answered it, is we had a question, do you include your salary in the calculations in the profit percentage? And I just told them if they're on the road, no, it'd be technician included in the technician. But if they end up split it if they run calls part-time. So.
And if you don't run any calls, but you manage your service department, you still got to put that into the overhead.
No, you're either in the overhead or in the labor rate, yes.
Some percentage of your wage goes into that expenses. Because if you weren't able to manage it, you disappeared, you'd have to hire someone to manage it. So there's going to be a cost associated with it.
Got another question here. My techs are all commissioned. Wants to know the best way to convert to hourly.
Perfect. I love it. So take any period of time, say last month, and divide that by the number of hours worked in that month, and you'll get it down to an hourly rate. You may have paid them a lot last month because it was leading up to Thanksgiving. So you'll have a higher percentage or hourly rate because you might have paid more last month. So do it over a span that's a normal business span. Maybe even do it over 6 months and take that commission that you paid and then work it back into, divide by the number of hours that your business was open, and you'll come up with an hourly rate for those technicians. Hope that answered the question. Fred, would you do it any differently?
No, I did a year. I go back and annualize the salaries and divide by 2,080, which is 8 hours a day, 52 weeks a year.
Sure.
You got to convert however you pay. Combination of hourly and commission or bonus. You got to include all the costs.
Some people may pay salary. It just may be a flat salary. So you take that and work it backwards. Divide it by 52, divide it by 40. You'll get how much an hour you're paying them. If you pay them 50,000, divide it by 52, divide by 40.
You just you need to get whatever way you pay and convert it back to hourly. Okay.
I've got 3 files here. I'm not sure if you folks can see them and download them, but they're going to be available. One is entitled Cost of Doing Business, and it really just walks you through some of the steps that I've been talking about on the calculator. Another one document that I've provided or will have available to you all is efficiency. And it talks about different ways to focus on the efficiency in your company and how it's a team effort. And you need everybody to buy into that. And the last one's very interesting. It was written many years ago, Zero Margin Warranty Parts, written by Rod Williscroft out of Total Appliance. And he was the one that came up with that calculation of a company that had 0 warranty and a company that had 50% warranty. And he was able to show it in black and white, which makes it a lot easier to understand and much stronger argument when you're sitting with your service manager for your region from a manufacturer.
And Paul, I just wanted to add, those documents, everybody, are by where you click on the chat to chat. There's a files area, and you can click on it to download.
We are going to make you go to the United Services website, though, to download the calculator itself.
As well as the presentation if you need to access it or want to access it later. Okay.
Sarah, Paul, can you walk through this? Where are the documents, or where will they be? They're not there yet.
So currently the documents are under files. So where you have a chat in your poll, you can see a files tab. You can open those up, and there's 3 different files there, which you can download. They'll also be available on the webinar replay page with this webinar to replay, as well as Paul and Fred's presentation, and then the 3 files, which are the cost of doing business, the efficiency, and zero margin warranty parts.
Okay.
So I hope you found today's information useful. It definitely, there's an easy way to do this, and that's just dividing your expenses by the number of calls completed last year. It's not accurate enough to show you if you change someone's wage partly through the year, or add a truck, or take on a new line. And so going through the calculator really gets you in tune with what's it costing you to do every activity in your business. And if it's not making money in doing that activity, you need to figure out how to get it to make money or stop doing it for pretty straightforward.
Perfect. Does anybody have any other questions for Paul or Fred? If you do, you can also reach out to us at administration@unitedservicers.com, and we can definitely get those questions answered for you.
Yes.
I noticed in the chat that Bill Hannafont was saying that the presentation continually freezes. I hope that was not the case for the whole thing, but as Sarah's pointed out, it will be available. You can download it and go through it. Plus this document that I'm telling you about that's in the files that you can get, the CODB file, that will walk you through the stages of the calculator. And incidentally, on our website, when you download the calculator, there's another download there that's talking about how to use the calculator. It doesn't give you text on how to do it. It's a more confusing document, to be honest. So make sure you get a hold of my article on CODB, and that will help you understand how to use the calculator.
Yeah, and if you have any problems downloading any of them, again, you can reach out to us at administration@unitedservicers.com or call us, and we can definitely walk you through it or email it to you. So thank you, everybody. Paul and Fred, thank you so much for your time this afternoon. We really appreciate it, and we hope everybody learned a lot, and we look forward to seeing you on our next webinar, which is next Tuesday. We're doing a flat rate labor pricing, so if you're not registered, go ahead and register today. We'll see you then.
Thank you so much.
Thank you. Have a great
Thanks, everybody.
day. Yep.
Bye for now.
Bye.